This is our 2017 version of the employer informational seminars. Kind of gotten away from doing these, is my understanding, but this is our first attempt to get back into them. My name is Grant Brower. I'm the Employer Services Manager. I'm brand new to TRS, so bear with me. But we've got a good team here and a couple good presenters that are going to fill your head with information. So, who are the people in the lineup over here? This is the Employer Services staff that you all work with. So I thought I'd have them all come up, introduce them, just so you know who they are. It's always good to put a face to a name. So, with that, speakers first. Jenny Wisdom is an Auditor 4. She's going to be your main speaker today, do the presentation. She's been here for, I don't know, 55 years, something like that. Lisa Lockey is our projects manager. Lisa's been here twice that long. Lisa's the go-to for everything, and she's going to be manning the questions on the computer. I don't know whether to use my list or just go down the line. Mindy Kinder. Well, most of you. Sherry Heights. Kim Hahn. Jane Dorsey. Eric, I always want to call you Vander Burr. It's Vander Wall. I make up names in my head. Kendra Kornak, some of you know. We stole her away just recently from District 186. Casey DeGroot. Our new daddy, Stephen Wickenhauser. Steve Eck is hiding in the audience. Steve's a short timer. You're all invited to the retirement party as soon as he lets us know when it is. So this is the Employer Services staff. Chris Erickson isn't here today, but he's the last member. And then you all met Debbie Bishop when you signed in. Okay, so this is the Employer Services staff. Couldn't say enough good about them. And now you have a face to go with the names and the voices. All right, thanks.
Well, good morning, everyone. As Grant said, I'm Jenny. I'm going to be doing most of the presentation. Since we haven't held seminars in several years, and there haven't been any major legislative changes, we decided to kind of do an overview of all things TRS. So this will hopefully be a good refresher for some of you seasoned bookkeepers. And for those of you that are new, we hope that you will gain a better understanding of TRS. And like Grant said, we want this to be informal and interactive, so stop me when you have questions. Just raise your hand. We'll get to your questions. And then, like I said, we'll take a break hopefully around 10:30. So your handout is a condensed version of the slides that you will see today, and you've got space to write notes out to the side. You can access the full slide presentation on our website if you would like to print it out when you get back to work. And you'll notice that some of the slides reference the chapter in the employer guide that you can find the information we discussed today. So everything that we talk about you can find in the employer guide. It is a great reference tool that we encourage everyone to use. And I also want to mention that maybe not everything that we covered today may appear on the slide. There's a lot of information, so we're just trying to highlight the more common areas for you on the slides. So we're going to start off by talking about membership. In order to be a member of TRS, there are 3 requirements that must be met. A person must hold some type of valid license issued by the State Board of Education. That license has to be registered in order to be considered valid. They must be employed in a position for which the State Board of Education requires licensure, and the employee must be an employee of a TRS-covered employer. If you have salary for license work that you pay to a third-party employer, who then that employer, that third party pays the employee, those earnings are not reportable to us. They have to be your employer. You have to be paying them in order for them to be a member of TRS. An example would be if your district employs a school psychologist, but you pay an outside entity for the psychologist services, that psychologist doesn't qualify for TRS membership since you are not paying them directly. On the other hand, that is not the same thing as if you have a psychologist that you pay through accounts payable. If you pay them through accounts payable and they meet all of the other membership requirements, they are still reportable to TRS. Paying them through accounts payable does not negate their membership in TRS. Participation in TRS, of course, is not optional. If members meet all 3 requirements, you have to contribute to TRS. If they do not meet the requirements, they cannot contribute to TRS. If you have a member that changes from a licensed to a non-licensed position, he or she will no longer qualify as a TRS member, and you can always check with IMRF to see if they would meet the IMRF requirements for participation in that system. The state board ultimately determines if licensure is required, not the district and not TRS. So if there is ever a question regarding whether or not a position requires licensure, you can email a copy of the job description to the Illinois State Board of Education at compliance@isb.net for determination. That is the email address you would want to send your request to. In that request, we want you to ask ISB to determine if educator licensure is required based on the job description. Do not ask them to determine if a position is TRS or IMRF. They don't want to answer that question. What you're looking for is whether or not the position, based on the job description, requires educator licensure. There is a list of the positions that are covered and not covered in the employer guide in Chapter 2. So if there's ever a question, we do have a list of the most common positions on page 2 of Chapter 2 of the employer guide. Anything else, we usually suggest go ahead and send a copy of the job description straight to the state board for determination.
Hey,
Your non-contributing.
Jenny,
Yep.
I promised I wasn't going to do this, but can I ask a question?
Absolutely.
Back to the licensure, because I know questions have come in before when the board rules whether, say they rule that something does not require licensure, and the district comes back and says, well, how do I appeal this? What has the board told us on that?
The board has told us, state board has indicated that there is no appeal process per se, but if you would like to resubmit the job description with any changes to it, they will reevaluate it to give you a new determination. But there is not a specific appeal process for that. Your non-contributors to TRS would include anyone that, of course, is not licensed, teachers who are employed in positions that do not require a teaching license. An example of that would be a teacher's aide. Any retired TRS or Chicago Teachers Pension Fund retirees who have not exceeded the post-retirement employment limitations. So in order to be eligible to retire, a member must terminate active service as a teacher. To satisfy this requirement, the member must formally resign. He or she has to then wait at least 30 calendar days before returning to the same employer, and it is not permissible to prearrange any post-retirement employment with the same employer. Members that have established termination of service cannot return in the same school year that they last contributed. What that means is if you have someone that retires in December, they are not eligible to come back in a post-retirement position until the following July 1. They cannot return in the same school year they last contributed to TRS. Once a member retires, he or she is limited to 100 paid days or 500 paid hours per school year. That is July 1 through June 30th. It does include all employers that a retiree works for. It is not per employer, it's per fiscal year. Only licensed work counts towards the limitation, so retirees can work in a non-licensed position without limit. The annuitant should maintain a log of the time that they work. Whether to count by hours or days actually depends on the schedule that the member is going to be working. When counting by hours, the maximum number of hours that you have to count towards the limitation is 5. So even if you have someone that works a 7-hour day, they only have to count 5 towards the limitation. If they're working 5 or more hours per day, they should just count by the daily limitation. But if it's a combination of partial days, which is less than 5 hours, and full days, it's more advantageous to them to count by the hourly limitation, because they could technically work on more than 100 different days. As long as they're under 500 hours, they're still okay. They must count all the time that they are required to be there for licensed work, and they do not have to count the time they spend performing extra duties that don't require licensure. The employer does have a duty to notify TRS if the limitations are exceeded. So We understand you guys are only aware of how much time they work in your district, but if you're aware that they're going to exceed the limitations, then you must contact us so that we could stop their pension. And they become reportable to TRS then on the 101st day or the 501st hour. And they'll continue to be reported until they retire again through TRS. As long as they do not exceed the limitations, they do not pay any TRS or THIS contributions. They are basically Medicare only. If you employ any Chicago annuitants, anyone retired from CTPF, the Chicago Teachers Pension Fund, they also do not contribute unless they exceed 100 days or 500 hours. Once the limits are exceeded, they become a reportable active member of TRS. It does not impact their benefits from Chicago. They can keep accruing benefits from their Chicago Teachers Pension Fund, but once they become an active member of TRS, then they will just continue until they're eligible for TRS retirement benefit or to take a refund from TRS. Any questions on membership? All right, we'll move on to whenever you have new employees or even current members, there are a couple forms that we ask that members complete for us, and you guys either send in to us or they can send in to us. The first one is a member information and beneficiary designation form. This is called the MIBD form. You must use our form. Do not use payroll or district generated forms. We know some payroll systems have a member information form that they may have created, but we do want you to use our form. It is available on our website, and it is form fillable. So if you go out and look at it on the website, they can actually type in and fill in their information. They still have to physically print that out, sign it, and mail it in to us. We also now require identification. In order for a benefit to be paid out in the future, we have to have on hand either a copy of a birth certificate, a driver's license, or a passport. They do have the ability to directly upload that information from a member account if they have a member account. And we do ask that you send the MIBD forms to us immediately. Do not hold them until the end of the year. This is our way of setting the member up on our system so that we recognize the Social Security number. When you go to do your annual report, and as long as the Social Security number is in our system, we will recognize that employee. So it gets the ball rolling on setting them up on our system. We can send information out to them so that they can provide us with their address. The second form that new members need to fill out is the SSA 1945. This is actually a form that is administered by the Social Security Administration, but TRS is required to keep a copy of it on hand in their member file. It basically just notifies teachers that they are covered by TRS and not by Social Security. It explains the government pension offset and the windfall elimination provision. And it has to be completed by any TRS members hired after January 1st of 2005. So we're well into more than 10 years that they've been having to complete this form. The form asks for an employee ID at the top, which is just the member's Social Security number. And then the employer ID would be your 7-digit TRS code. And again, send this to TRS, and you're welcome to keep a copy for your records if you would like. New members are either going to be Tier 1 or Tier 2. So as of a few years ago, in 2011, Public Act 96-0889 created 2 tiers of membership. If a member's first day of service in a TRS-covered position was before January 1st of 2011, then they'll qualify as a Tier 1 member. If the member's first day in a position was on or after January 1st of 2011, and he or she did not have any previous service with a pension system that has reciprocal rights with TRS, then the member qualifies for Tier 2. Reciprocal system examples would be IMRF, state employees, state universities retirement system, and even the Chicago Teachers Pension Fund. So if they establish membership in one of the reciprocal systems prior to January 1st of 2011, they'll be Tier 1. But for anyone after, we'll qualify Tier 2. At this time, you don't have to treat your Tier 2 employees different than your Tier 1 employees. It is strictly for retirement benefits. The only thing that you have to be concerned with is that there is a salary cap for anyone that's a Tier 2 employee. The salary cap for 2016-17 is $112,408.32. That is the maximum earnings and salary that you can report to us on the annual report for anyone that's Tier 2. Most likely you won't have this situation with a Tier 2 member. One of the common examples, if you're going to see it, would be with an administrator that maybe comes from another state. In most cases, they're going to earn more than the $112,000, but you shouldn't see it with any new teachers. If they are, then I want their job, because that'd be a nice salary to start out at. All right, moving on to creditable earnings. Not all types of compensation are recognized by TRS as creditable earnings. Proper identification of creditable earnings is important because it's used to determine the contribution amounts due, and the earnings may also be used to calculate a member's benefit. Some examples of reportable compensation, of course, would be your contractual teaching or administrative salaries, wages for substitute and homebound teaching. You would only count the time spent working in a licensed position. For your subs, any non-licensed work is not reportable for your subs. They only pay TRS on licensed work, so that would be classroom instruction, for example. They would not pay TRS on coaching duties. If you have licensed subs that work in teacher's aide or paraprofessional positions, they must be reported to IMRF, not TRS. So subs are only reportable when they're filling in for a certified teacher, not if they're filling in for a teacher's aide. Same thing goes if you have a teacher's aide that holds a license. Any work they do in a certified position will be reportable to TRS and not IMRF. So it is possible they could have service in both systems in the same year. Are there any questions on that? Because it gets confusing, and as we've been doing our field audits, we're finding that more and more teachers' aides are getting their days and their earnings are getting reported to TRS in error when they are covering for a non-licensed position. Extra duty earnings. If the extra duties involve supervision of students or are related to the academic program, they are reportable for your full-time and your part-time contractual teachers. And this is regardless of licensure requirements. Your contractual teachers, as long as they are contractually employed, they pay TRS on any extracurricular duties that they might do. Your non-contractual teachers, like I mentioned, anyone that might be a substitute or an hourly employee, they only pay TRS on extra duties if that extra duty requires a teaching license in order to do the job. There are not many extra duties that do. An example would be a driver's ed teacher. That does actually require a license, but classroom supervision or, for instance, lunchroom supervision, detention duty, or even coaching, those are examples of non-certified extra duties. They do not require a teaching license in order to do those. If it's not known whether licensure is required, again, contact the state board at the email address that is on the previous slide that we went over. And some examples of common extra duties that are not related to the academic program and should not be reported to TRS in any situation, whether they're a sub or a contractual teacher, would be someone that is responsible for computer hardware and software maintenance. That is not reportable to TRS. It does not involve supervision of students, nor is it related to the academic program. Transportation director or construction manager stipends, treated the same. Bus driving, if you have someone that drives a bus, whether it be the regular morning or afternoon bus routes, or even transporting kids from school to school if you co-op your sports, or transporting kids to a sporting event. The bus driving duties, that stipend is not reportable to TRS. That is something that qualifies for IMRF. And then game work. I'll be right, 1 second, I'll finish up. Game work that does require supervision of students is reportable. If your game work, such as ticket taking, any kind of running the scoreboards, running the question, sorry. Yeah, we'll get the microphone to you for your question in just 1 second. So game work, if it doesn't require the supervision of students, you do not report it. So we kind of leave it up to you guys on those kinds of stipends. If you tell us it requires supervision while they're doing those duties, it's going to be reportable. Sorry, I apologize that you do have to ask your question to the microphone, but no one can see you.
To clarify, you have a coach who is a full-time teacher in another district.
Yes.
Okay.
If you have a good question. If you have a coach that, as long as they are contractual in your district or working for another TRS covered employer, that coaching duty is reportable. And it's actually reportable. Their employment type on the annual report, which we'll talk about later, is going to be E for extra duty. So you're strictly reporting the money to us. There are no days or service credit that go along with that. So yes, the key is they have to be a contractual teacher in your district or another district in order to pay TRS on that non-certified extra duty work. Good question. Any other questions on that? Yes, hold on.
What about a teacher who attends a workshop and they receive an extra stipend for that?
Yes. The question is a teacher that attends a workshop. As long as they're a contractual teacher, again, we've been told by the state board that workshops do not require a teaching license in order to attend them. So as long as they are a contractual employee of yours or another school district, it is reportable. You would not report the day in that case since it doesn't require a license, but you would report the earnings. If you have a reportable extra duty that's performed in one school year, but it's not paid until the next year because they turn in a late timesheet, that money is still reportable in the year that they actually perform the work, which is what we refer to as reporting on an accrual basis. So if you find that you've had a late timesheet turned in and you've already filed your annual report, then you're going to have to contact us, and we can either adjust the report if we're not finished with our review, or we can do an adjustments to earnings in order to correct that. So keep that in mind. You have to report the earnings in the year the work is actually done, not when it's paid. That goes along the lines with summer school. As you see here for summer school, it says you must report it on an accrual basis.
We have some questions.
Okay. I'm going to stop for a second. We've got some questions. Go
Jenny,
ahead.
I'm going to back up to
Yes.
something you talked about earlier. Did you say I do not have to withhold FICA on retirees?
That is correct. The question is FICA on retirees? No. Retirees do not qualify for FICA. They are Medicare only.
Thank you.
Any other questions?
What is the Tier 2 earnings limit for FY18?
We do not know what the Tier 2 earnings limit for FY18 is. That is actually established by the Department of Insurance, and they usually don't get that number to us until around October or November, so we won't know until the fall.
Okay. And I think you'll be getting to this in a few minutes, but I'm going to put the question out and then you can talk about it. If an administrator receives a bonus for performance during the 16-17 school year, but has not paid it until after the last 16-17 school year paycheck, which year is the bonus reportable?
Okay, that question actually is going to be covered, I believe, on in a couple slides from now. It's under the lump sum, so I'll remind me to address that if I haven't already.
Okay, thank you.
Whenever we get to that slide. Any other questions you guys can think of before I move on? Okay, hold on a second. We'll get the microphone to you.
I'm sorry, where was that?
Back here in the corner.
Which one? Okay. And Lisa, let me know that you're getting new ones come in now.
Okay.
You said lunchroom supervision is not reportable, correct?
I said it's only reportable from contractual teachers.
Okay, I just wanted to double
Yes.
check. Thank you.
Any of those types of non-certified extra duties are reportable for contractual teachers, not for subs or hourly employees. That makes sense? Okay, perfect. Summer school earnings, when you're reporting summer school earnings, the same rules apply during the summer as during the regular school term. As I mentioned earlier, the earnings must be reported to TRS on an accrual basis. This means that earnings are reportable in the period in which the work was actually performed, which may not coincide with the period in which payment is made. For your contractual teachers, summer school teaching and other licensed work, of course, is reportable. Non-licensed extra duties, as long as they're related to the academic program or involve supervision of students, those are still reportable as well during the summer. This also applies to contractual teachers from another district. So again, if you employ someone for summer extra duties at your district, as long as they are contractual at another district, those summer earnings are reportable. You must remember to include the additional summer school days in the contract days and the days paid when you're reporting them to us, which we'll talk about more during the annual report section. If you employ non-contractual teachers, just hourly employees, The summer school teaching and other licensed work is all that's reportable. They would not pay TRS on any summer extra duty, so it would only be summer classroom instruction or summer driver's ed. It has to be licensed work for a sub or an hourly employee to pay TRS on that summer school. So another example of non-licensed work might be summer curriculum writing, any kind of summer workshops, or summer coaching. Those all do not require a license, so they are only reportable for your contractual teachers, not for subs or hourly employees. If you happen to pay gift cards in lieu of insurance, they must be reported to us on an accrual basis, so it's reportable in the period paid, unless it's paid as a bonus. If you give a gift card as a bonus, it has to follow the lump sum reporting rules, which is the question that Lisa had asked about bonuses, which I'll get to that here in a couple of slides. Orientation, if you pay for orientation, the days and the earnings are reportable. That is certified. State Board has come back to us recently and said orientation days do require a license, so the earnings and the days are reportable going forward. If you have contributions to any kind of tax-sheltered annuity, whether it be a 403B or a 457A plan that's paid in addition to anyone's salary, that also qualifies as creditable earnings. So if it's a salary reduction, you're reporting, of course, the gross salary to us before the reduction, but if your board is paying money towards a tax-sheltered annuity in addition to salary, that is additional creditable earnings to that member. If you have a flexible benefit plan, a flexible benefit plan is the option to receive cash or a tax-sheltered annuity in lieu of taking board-provided health insurance. It's reportable for everyone that has the option, regardless of which option they actually choose. So if you have a true flexible benefit plan, it's reportable for your insurance takers as well as your cash or annuity takers. The amount that is reportable is the salary option. So if they were to opt out of the health insurance, what is reportable as creditable earnings is the value of the cash or annuity option that they would receive. Flexible benefit plans need to be written clearly and specifically in your individual contracts or your collective bargaining agreements. We won't recognize it if it's not written in the contracts. As we've been doing our field audits, we're finding that districts that have flexible benefit plans don't have them clearly defined or written into their contracts. We are going to be picky about that going forward. It has to be clearly defined in a contract or a collective bargaining agreement. We're not going to look at what the intent of the board was. We actually want to see it in writing. Any questions on flexible benefit plans? Because it can be confusing. If you ever do have questions, or if your district is considering implementing a flexible benefit plan, call us with questions, because we'll help you work through your individual situation to determine if it's reportable and what amount would be reportable for you. Paid sick leave, personal leave, or vacation days that a member actually uses when he or she is absent, those are treated just like actual work days, and the earnings are reportable to TRS. Lump sums and severance payments. This is the question that Lisa had asked earlier. Typically, these include bonuses, longevity stipends, payment for unused sick leave, personal leave, or vacation days. For active employees, a lump sum is reportable when it's paid. So it's reportable in the fiscal year that it's paid. If it's a bonus for the 2016-17 school year, but it's not paid until 17-18, it's reportable as 2017-18 creditable earnings. If a member is terminating, whether or not it's reportable depends on the timing of the payment. For it to be reportable as creditable earnings, the payment must be made prior to or concurrent with the later of either the last day of school or their last paycheck for regular earnings. So if they're terminating, whether or not the payment is reportable depends on the timing of the payment. If they're an active teacher, it's reportable in the year that the payment is actually made to the member. So I think that answers the question we had through the email. If you as an employer are paying a 2.2 or optional service cost for any of your members, that is additional creditable earnings. It again follows the lump sum rules that we just talked about. If it's paid in a year where they're an active employee, it's reportable in that year. If it's paid at termination, if they're getting ready to retire, it depends on the timing of the payment on whether or not the optional service would qualify for creditable earnings. So as a rule of thumb, if you're trying to avoid 6% costs when paying these types of costs, you want to make sure you pay it after their final paycheck and after their last day of work. And then it's non-creditable, and it would not be subject to any 6% costs. Board paid member TRS contributions. Any portion of the 9% member TRS contribution that's paid by the employer as a benefit rather than deducted is recognized as additional creditable earnings. This creates a compounding effect with a factor that you have to use. Make sure that you are using the correct factor for FY17 because if you recall, as of July 1st of 2016, the member contribution rate went from 9.4% to 9%. The factor you should be using for 9% this year is 1.098901. The old factor for the 9.4%, which was 1.103753, that should no longer be used beginning with FY17. We're going to go over non-reportable compensations. So the following list will give you ideas of the type of compensation that would not qualify as creditable earnings for any of your members. If you have any kind of expense reimbursements or allowances, examples would be cell phone reimbursement, travel allowances or reimbursements, or dues reimbursements. It's fine that you pay those as an employer, but they do not qualify and should not be reported as creditable earnings. Same goes with employer-paid fringe benefits. Insurance benefits, including health, life, and disability, when you do not offer a cash or annuity plan, health insurance by itself is not reportable as creditable earnings for anyone. If your board pays the THIS contributions in addition to salary, that does not qualify as creditable earnings. Only board paid 9% qualifies as additional earnings to your members, not the board paid THIS. Salary conversion. This is probably one of the more confusing subjects that we have to try to make a determination on. TRS presumes that any decrease in non-creditable compensation in the last 7 creditable school years is for the purpose of increasing final average salary. So for example, if you have a superintendent that's offered a flexible benefit plan with a cash option instead of just being offered health insurance, and it's within the last 7 years of retirement, we will apply the conversion rules. So basically, the earnings will be reportable at the time, but the creditable earnings may be decreased by the value of what was previously non-reportable at retirement time. So you would continue to report salary as you're paying them, but if conversion is an issue, we will look at this at retirement time and possibly go back and disallow the value of the insurance if we feel that conversion did occur. This usually affects administrators more than teachers, since the administrators have more latitude in negotiating their individual contracts. And the conversion won't be applied if it's a change in benefits that results from a collective bargaining agreement. So if it's a change to your teachers in the collective bargaining agreement that impacts everyone and you add a flexible benefit plan, conversion is not an issue. It's usually more of an issue on an individual basis. Any questions on salary conversion? Anytime that you have an agreement, any kind of a settlement agreement, a judgment, or a contract buyout, we ask that you please send us a copy of these. We must review each agreement, and the review is strictly confidential. We're not concerned with the circumstances behind the agreement. What we're looking at is termination date, characterization of any payments they might receive, and then the actual payment dates. Generally, we recognize salary and service credit through a member's termination date. We won't recognize service or earnings for any paid leaves of absences or for damages that might be awarded. So we have any questions on creditable or non-creditable earnings? Any questions on email? Okay. All right, we're going to move on to payment of required contributions. So as you see here, we have a chart of the contribution rates that are in place for 2016-17, and we also have a column for the contribution rate changes that are going to go into effect for 2017-18. The 9% member TRS retirement contribution, this is used to fund retirement benefits, survivor benefits, and annual annuity increases. It is an employee obligation, but it can be paid as a benefit by the employer. If it is board paid, as we talked about earlier, it must be reported as creditable earnings using that compounding factor. And it also must be tax sheltered. The 0.58%, or MBI, as we refer to it, which stands for Member Benefit Increase, this is used to fund the increase in retirement benefits due to the 2.2 formula that went into effect back in 1998. It must be paid by the employer, and it cannot be deducted from salary. It also is not reportable as creditable earnings since it's an employer contribution, not an employee contribution. You've got a member THIS and an employer THIS contribution. The THIS funds are used to fund our retired teachers' health insurance program, or the TRIP program. It is the member THIS, the 1.12%, is an employee obligation, but again, it may be paid as a benefit, but as I mentioned earlier, it does not qualify as additional creditable earnings. It also must be tax sheltered beginning January of 2002. So it's tax shelterable for several years now. For FY18, the contribution rate is going to go up to 1.18%. Along with the member THIS, there's also the employer THIS contribution. This, again, has to be paid by the employer. It cannot be deducted, and of course, it doesn't qualify as creditable earnings. It will be increasing to 0.88% for the upcoming fiscal year. Contributions based on federally funded salary. Currently, this year, that is 38.54%. It is calculated on whatever portion of the member's creditable earnings is actually paid from a federal grant. This includes sub-pay and extra duty pay stipends. Some typical federal funds include Title I, Title II, Title III, Title IV, Title VI, IDEA flow-through, and the Carl D. Perkins Vocational Educational Act. This 38.54% is in addition to the 9% and the 0.58% and the employer contributions that you guys have to pay. So it is in addition to the other contributions listed here on the slide. It is strictly an employer contribution and cannot be deducted. And your business office should keep the grant administrators updated on the federal fund rates. So please ensure that your grant writers are using the accurate percentage, which this year is 38.54, and it's set to go up to 44.61% for FY18. So yes, that is a pretty large increase. It will most likely keep increasing from year to year unless there is a change. Contribution due dates. If you issue your payrolls between the 1st and the 15th of the month, you have to have the contributions into us by the 25th of that month. If your payrolls are issued between the 16th and the last day of the month, they're due by the 10th of the following month. All contributions for the fiscal year have to be received by July 10th. Even if you haven't paid all of your teachers their summer checks yet, you still have to have the contributions into us by July 10th. If you find yourself in a situation where you owe contributions and it's after the July 10th due date, between the dates of July 11th and August the 15th, you can actually use pay period 60 to make an additional contribution to FY17 without being subject to penalty. So you've got a little bit of a window there if you have summer earnings or late time sheets turned in and you find that you owe additional contributions for the FY17 school year. Any questions? Yes.
I have some. On the MIBD form, when you talked about submitting the driver's license with it, is that due when the member submits their MIBD form, or can they send it later?
Yes, they can. It's either or. If they have a copy of it and they want to send it in with the MIBD form when it's filled out, that's perfect. If not, they have the ability to do that later. And as I mentioned, it can be uploaded directly from a member account. If we don't have it on file by the time they try to apply for some type of benefit, we will require it at that time as well.
You mentioned that they can upload it, so they don't have to mail it, they can upload it. Can they fax it to us?
Yes, the MIBD forms can be faxed, emailed, or mailed through the Postal Service. As far as uploading, the form itself cannot be uploaded. The form itself still has to be printed out and mailed in. It's the driver's license, it's the attachment, the proof of life, basically, that can be uploaded to TRS, which is the driver's license, birth certificate, or copy of passport.
Thank you. And then I do have a couple questions on creditable earnings and lump sum payments.
Okay.
An administrator is returning to the classroom. The last paycheck for the administrative salary is June 23rd, 2017. The first paycheck for teacher salary for the 17-18 school year is August 18, 2017. The administrator is due payment for unused vacation days to be paid in July. Is this reportable, and in which school year?
Okay, the payment for unused vacation days, if the payment is made in July, that would be FY18 earnings. It would have to be paid by June 30th in order to be reportable in the 2016-17 school year. Anything paid July 1 and after is reportable in the next fiscal year.
Thank you. And what about coaching? Is that extra duty that should be reported to TRS?
Coaching. Coaching is a non-certified extra duty. That is reportable for contractual teachers of either your district or neighboring school districts. So as long as they are a full-time or part-time contractual teacher or working for a TRS covered employer, the coaching duties would be reportable. The coaching duties, however, are not reportable for subs or hourly employees.
Thank you. Do you pay FICA on retired teachers for subbing?
No, FICA is not any retired teachers, whether they were contractual or subs, do not pay FICA, even in retirement. Just because they're retired does not make them eligible for FICA. Since they would normally be covered by TRS, except for the fact that they are retired and they have the post-retirement employment limitations, they still are not eligible to pay into Social Security on those earnings.
What if they're subbing for an aide?
If they are subbing for an aide, then first of all, if they're retired, that does not count towards any post-retirement employment limitations. As far as whether or not that would be eligible for FICA, they would have to check with IMRF on that because it would actually be an IMRF reportable earnings and days.
Thank you. If a teacher is teaching professional development to other teachers over the summer, would you report the money and would you count the days?
Of course, someone's going to ask. Okay, professional development. That is one of those gray areas. Normally, help me out with this one. It would depend on if the professional development as a presenter.
If they're just doing it on an as-needed basis, then it doesn't require licensure, is our understanding from the state board.
Okay.
So the money would be reportable if it's done by a full-time or part-time contractual teacher, but the day, you would not count any days for it since it does not require licensure. It is reportable as an extra duty.
Now, were they asking about being a presenter at something that's professional development?
Yes.
Okay, so as a presenter, isn't it our understanding that that does require
Only if that
licensure?
was their full-time, if
that was their
contractual job.
Okay, so if they're a professional development coordinator and that's their contractual position, then yes, it would be reportable. But if it's on an as-needed basis, that's when the earnings will be reportable as long as they are contractual but not days, so they wouldn't earn service credit for that. We have another question here in the back. Okay, the question is you have a presenter at a workshop and you believe they may be an employee of another employer in a contractual position, but you're not 100% sure. Are you paying that person directly or are you paying the company that they're working for that is billing you? Okay, so in this situation, the employee is being paid directly by the district. It would be reportable. The earnings are reportable, but you wouldn't have to add any additional days for service credit. So the earnings are reportable as long as you are paying her directly. Okay, in this situation, you're telling us that no TRS was withheld. Technically, we need to go back and do a correction in order to report that. We can talk to you about that later. You can give us a call. One thing to remember with this is if you're unsure whether or not they're employed in another district, go ahead and report them. Because we have research that we do after the completion of all of the annual report audits that we actually go back and look at multiple employment. And if she ends up being reported by you with the e-employment type, since she doesn't earn service credit, she'd be reported as an extra duty only employee. If she doesn't have any contractual service on record reported from any other employer, then we will verify what she did with you. And if it's non-licensed work, we're going to end up taking that off. So it's easier for us to take it off and refund it than it is to try to collect it later, as far as the contributions. Any other questions on that? Did you have any other questions, Lisa?
No, thank you, Jenny.
Okay, if you owe employer retirement costs for excess sick leave or salaries in excess of 6%, you will receive a notification letter prior to the amounts due appearing on your monthly bill. The notification could include a salary exemption affidavit. We ask that you only complete that affidavit if you truly believe that you qualify for an exemption. And the employer contribution for any excess sick leave days is due within 30 days of receipt of your employer bill. The employer contribution for salary increases in excess of 6% may be paid as a lump sum within 90 days of receipt of the employer bill. Contributions not paid within 90 days will begin to accrue interest, and the balance does have to be paid within 3 years. So you've got 90 days to pay a 6% cost without interest. After 90 days, it accrues interest, but you have 3 years to pay it in full. On the other hand, sick leave, due within 30 days. If you are penalized for any late payment penalties, we will bill you for those on the monthly employer bill. You can request waivers. You can submit those in writing to our accounting department. So if you are penalized, you can at any time ask for a waiver of that penalty. So do we have any questions, additional questions on payment of contributions? Public Act 94-4 established new employer contributions for salary increases over 6% that are used in the final average salary calculation and for granted sick leave days that are awarded during a member's final 4 years before retirement. For salary increases greater than 6%, the excess salary costs will only be applied to increases in the final average salary years. Final average salary is defined as the 4 highest consecutive salaries over the last 10 years of service. This cost is calculated on a year-over-year earnings from the same employer. You as employers will never be subject to a cost for salaries or extra duties that a member earns through another employer. You're only subject to cost for earnings in your district. As long as a member works 170 days, the annual salary rate is going to be used in the calculation of final average salary. If a member works less than 170 days, the creditable earnings amount is used in the calculation, and we actually do an earnings credit calculation. We do have several examples in Chapter 8 of the Employer Guide regarding excess sick leave costs. There are 2 permanent exemptions that exist for excess salary costs. The first one is for consolidations and annexations. So for the first year under a consolidation or an annexation, salaries would not be subject to the 6% cost. The second exemption is for a full-time equivalency. For your part-time and your substitute teachers, TRS will use a full-time equivalent rate to determine if salary increases exceed 6% during any of the final average salary years. So we won't charge you based on the actual earnings in the part-time position, for example. We would convert that to a full-time equivalent and then do a comparison to see if the 6% has been exceeded. As you may recall, there were temporary exemptions in place for such things as overload, summer school, certain promotions, and payments to members from the state of Illinois or from the State Board of Education, just to name a few of them. These temporary exemptions are no longer in place as of 2014-15 and future years. So beginning with salary earned in 2014-15 and future years, there are no exemptions to the cost. Employers may still qualify for a temporary exemption on salary that was earned prior to 2014-15, which is the affidavit I was referring to earlier. So keep in mind, going forward, every bit of money that they earn is subject to a cost. There are no exemptions beside the 2 permanent exemptions. The second cost that an employer may be billed for is for excess sick leave days. The cost only applies to sick leave granted in excess of the teacher's normal annual allotment during the final 4 years before retirement. The normal annual allotment is defined as the annual sick leave granted to your members under a collective bargaining agreement or employment policies. This would include personal leave days as long as they can use those personal days as sick leave days. If your administrators get more days than your teachers, those additional days are subject to cost for the last 4 years. An employer contribution for excess sick leave days will not be required if the sick leave is granted earlier than 4 years before retirement, if a member has been inactive for more than 4 years before retirement, or if the granted sick leave days do not qualify for TRS service credit. We do have calculators on our website to estimate 6% and excess sick leave costs. Employer contributions for salary increases in excess of the 6% and for the sick leave days granted in excess of the normal annual allotment must be paid by the employer. They cannot be bargained or negotiated as member contributions. So if you owe a 6% cost or an excess sick leave cost, you are responsible for that payment. You cannot push that payment off onto your members to pay that or to reimburse the district. Any questions on that? We have any questions through email? Okay. Members may receive up to 2 additional years of service credit at retirement for unused uncompensated sick leave. The days must be available for use in the event of illness, and the Administrative Code prohibits granting service credit for days added to the record of a member solely for the purpose of increasing their retirement service credit. If you do grant additional days over and above the normal annual allotment in the final years of service, you must use a 3-step formula to determine if those days are reportable to TRS for service credit. The formula is as follows. Step 1 would be from the date sick leave days are added or reinstated, you have to determine the number of paid days remaining until the member's retirement or termination date. From that number, you subtract off the number of sick leave days that they already have on record, and the difference is equal to the additional days, if any, that may be added or reinstated to and reported to TRS at retirement. Granted days that meet this 3-step formula, keep in mind, may be subject to an excess sick leave cost if it occurs in the final 4 years before retirement. And as I mentioned earlier, personal leave days may be reported as sick leave as long as you allow the member to use those personal leave days in the event of illness. If personal days are not allowed to be used for sicknesses, those are not reportable for service credit. Days deposited by a member to a sick leave bank that are never used and withdrawn upon termination can also be reported for service credit. The one thing you must do is you have to reduce the sick leave bank total by the amount of days that you're withdrawing. And we will not give service credit for unused vacation days. So for anyone that accrues vacation, you cannot roll those into sick leave and report them at retirement time for additional service credit. Sick leave payouts cause more reporting problems on supplementary reports than anything else. If a member receives any payment based on sick leave, and that payment is reportable as creditable earnings, the sick leave days used in the calculation of that payment cannot be reported for service credit. However, if the payment isn't reportable as creditable earnings, then all sick leave days on record are reportable to TRS for service credit. Chapter 6 of the Employer Guide has examples regarding the payout of sick leave days. TRS always takes precedence over any contract language. So some employers feel that turning in sick leave days that they're going to later pay out is a form of double dipping. This may be true on the district end, but it's totally acceptable to TRS. It is not double dipping in our eyes. It's up to each individual district to determine the number of unused sick leave days that a member is eligible for payment. We will not provide this number to the districts. So if you're paying sick leave as a post-termination payment, where you're paying it after their last paycheck, after their last day of work, and therefore it's not subject to the 6% cost, it doesn't qualify as creditable earnings, you are required to report all of the sick leave days on record to us, even those in excess of 340. So we will use up to a maximum of 340 for the calculation of their total service credit, but days above 340 are still reportable to TRS. An example? I sure do. So let's say, for example, you have a member that only needs 170 sick leave days to reach the maximum annuity benefit, but they have 220 days on record. So TRS will still recognize service credit for the full 220 days. The member may not earn more in their annuity benefit, but the additional service credit can impact other benefits, such as refund of their original 2.2 upgrade cost. So you may be paying them for the additional days over 170 as a post-termination payment, but all 220 days are still reportable to us because we will never recognize that payment as creditable earnings. And we do use all days up to a maximum of 340 to calculate their retirement service credit. Any questions on that? Because that gets really confusing, and that is one of the biggest problem areas that we come across. Lisa, did you have a question? No. All right. The following days are considered granted days, and they must meet the 3-step formula that we discussed earlier. Unused personal days that are not available for use as sick leave during the year, but roll into sick leave at the end of the year, those are considered granted days. If you allow them to be used as sick leave, then it's considered part of your normal annual allotment. Additional days that are given but are not tiered in your collective bargaining agreements, we know a lot of districts have tiered systems, and these are acceptable if the tiered systems are based on years of service or years of experience. Tiers are not acceptable if they're based on a member's age, retirement eligibility, or retirement notification. Your collective bargaining agreements need to be specific if you truly have a tiered sick leave system. If your contracts are worded to say additional days, then most likely these days are going to be subject to cost. So if you have a tiered system, you must define the number of days you are giving your employees. We don't want you to say, for example, teachers with 0 to 10 years of experience receive 12 days. Teachers with 11 plus receive an additional day of sick leave. It needs to define it as 13 days of sick leave. So tiered systems have to be specific. The use of the terminology additional days, you could find yourself in a situation where you do actually have a cost. We will consider those granted days. Bonus days that are awarded for good attendance are not using a certain number of sick or personal leave days. Any bonus days you give, those are considered granted days. Sick or personal days awarded in lieu of payment of extra duties or awarded to a member during the year because of some long-term illness. So if you have catastrophic days in your contract, those days are considered granted and could be subject to cost. Unused vacation or bereavement days that convert to sick leave. As I mentioned earlier, we don't give service credit for vacation days. If they roll into sick leave, they have to meet the 3-step formula, and they are subject to cost in the last 4 years. If you have unused personal leave days that accumulate 2-for-1 as sick or personal leave, the additional 2-for-1 days are considered granted days. If you have days that you don't define as personal leave days, for instance, you call them unused business leave, board leave, or emergency leave, any kind of non-designated days or no reason days, and you convert those to sick leave, we will consider those granted days. You must call them personal days for us to recognize them for service credit at retirement. So your agreements must be specific, and you must call them personal leave days, not any other name. For that reason, we are being very picky on that. We're not going to recognize anything not called personal leave days as or for additional service credit without it being considered a granted day.
What if you make bonus payments to retirees but can't make it until after their last day of work because you have to factor in timesheets? How do you handle that?
Okay, what you do with that, as I mentioned earlier, it is the timing of the payment. If that payment is due and payable to them as of their last paycheck date, but you can't get it paid by that last paycheck date because of the time it takes to process it, it would still be reportable as creditable earnings. So it has to be either paid or due and payable to them by that last paycheck date. If it's not due and payable and not paid until after the last paycheck, it would not qualify as creditable earnings.
Thank you.
You're welcome. Any other questions? Yes.
On sick leave time when they use days out of the sick bank, okay, and then their teachers give into the sick bank to replace the days this person has taken out. How is that handled?
Okay, the question is if you have a sick leave bank that someone actually takes advantage of and gets days awarded to them. How that works is, again, if it's in the last 4 years before retirement, those are going to be considered granted days. You would have to report them to us as granted days, but as long as they actually use those days and they're not turned in for service credit, there won't be a cost for them. So it may appear that, oh, we gave them excess days, but as long as those days are used, there's no cost that ends up being assessed at retirement time. For those teachers that replenish the sick leave bank and add the days back in, there's no impact to TRS on that because they're giving their sick days up to the sick leave bank. So as long as you're reducing their total that they have, then they're only going to receive service credit for what's on their record. Any other questions? Okay.
My question is on the bonus days awarded for good attendance. Are they only reported as granted days within that last 4 years for retirement?
They're always considered granted, but it only, if it occurs in the last 4 years, that's when they're going to be subject to cost. So if you give bonus days throughout their career, there's no issue. It's fine. What's what's important to remember is any given days, any additional days given in those last 4 years. That is the only days that are going to be subject to cost is the last 4 years. We don't look at anything 5 years or prior to retirement. You can give as many sick days as you want then, but if anyone receives bonus days in those last 4 years, that's when they're going to be subject to cost. And they also have to meet the 3-step formula to be deemed available for use in order to actually receive service credit for them at retirement time.